So a very good evening, everyone, and on behalf of Reserve Bank of India FinTech Department, I welcome you all to this panel discussion. I know it's pretty late in the evening, but I'm sure you would find it very interesting. And what I would say that, a lot of sessions are getting held out here today, but as you would understand, the financial services is one area where artificial intelligence is having one of the very early adoption. And it is also the adoption is increasing as we speak. A primary reason being this is one area where a lot of decision making happens through the processing of data and information. So it is one area which is ripe for taking advantages, innovating on top of that. And looking at this space, Reserve Bank of India had constituted a committee to look at the various dimensions, innovation potential, as well as risk mitigation dimensions. A committee was constituted and the committee has submitted its report, which is placed on our website in August 2025. And as part of the recommendations, 7 broad sutras or principles which were articulated. And I'm also happy to report that the Government of India has adopted those very 7 sutras or principles as the governance framework principles for the country. We would discuss a lot, like from early stage of experimentation, now we are moving towards making an impact on the ground. And this is an appropriate time to take stock, reflect where we stand today and how do we proceed from here forward. And to guide me in this journey, I have a wonderful panel with me today. And please join me in welcoming our wonderful panel out here. First, let me introduce Dr. Ravindran, who is at the helm of technology frontiers. He is heading the Wadhwani School of Data Sciences at IIT Madras. And he was also part of our committee member in the Free AI committee. And he has contributed greatly to this dimension. We look forward to his interventions. Thank you, sir, for accepting. Next to him, on his left, is Dr. Debarag Chand. He is the MD and CEO of one of the largest public sector banks in India, and it is known as the Global Bank of India, having the highest number of foreign branches across the globe. And it is also known as a digitally savvy bank, as they have taken a lot of initiatives in this area. We look forward to get a practitioner's perspective from his insights. Next to him is we are fortunate to have Ms. Tara Lyons, and she is representing JP Morgan Chase, heads the global AI policy, and she will definitely bring the global perspective and the experiences from various countries that a firm like JP Morgan operates across the globe. And she is heading the policy, and we would expect certainly the cross-country dimensions from her. And next to her, Dr. Debarag Banerjee. He is the Chief Data Scientist at L&T Finance, but he is also a PhD in AI from Stanford and has been working in this dimension for a pretty long year and has both the academic grounding as well as the practitioner's perspective to bring this to today's discussion. So let me, begin by, taking the first. Let's look at where we stand in terms of use cases. So let me first turn to Dr. Chand, who is heading the Bank of Baroda, and they are a full-service bank across all kind of lending products, deposit products, also has the responsibility on fraud, risk management, and full-service bank. So what are the early insights they see from application of AI in financial services? Where do they see the maximum benefits arising out of? And also in their journey so far, have they witnessed any constraints or anything that is holding them back? And what would they like the policy unlocks or as a country to unlock so that we can take it to the next level? Your thoughts, sir?
Sorry, I just have one request. In an effort to make it easy for the audience to see us, they made it almost impossible for us to see the audience. Can somebody dim the lights, please?
go ahead. Yeah. So thank you, Mr. Pati, and thanks to Reserve Bank of India for inviting me here. See, as a bank, clearly we have a huge scale. And when I say that we have huge scale, we have huge database. And we being both present in India big time and also overseas, many of the practices that we adopt is best practices. So in the context of that, the usage of AI in the bank has been quite significant. And when I say that the usage is significant, anything you want the AI usage to be there, you need to have a data lake. So we thought of having a big data lake. The data lake is of the size of some petabytes, which is there with us. So on the huge data, we have been using AI and ML since long. It is almost 6-7 years that we are using AI and ML. As on today, if I talk about, we have 50 use cases within the bank where the usage of AI ML has been there across different verticals. And these verticals are multiple, like we use AI in underwriting, we use AI in fraud risk management, we use AI most recently on the customer service also. So when I talk about the usage of AI by the bank on the underwriting system, the biggest advantage of usage of AI in the underwriting is the inclusivity that it brings. The AI usage has been on the underwriting has been significant across multiple underwriting system, whether it is the loan processing system. But the biggest advantage here when we, in the Indian context, when we talk about AI in the underwriting process is the inclusion. Why it is so? Because as you know, the banking, when we underwrite a loan or give a sanction to a loan, what is important for a customer is the customer creditworthiness. There are many businesses in India as on today, they may not have a credit history. Because of the AI tool, because AI is able to collect multiple data points for that customer, and the customer may not be having a credit history, the AI is able to help us in terms of underwriting these loans. So the underwriting has been a great use case for us in terms of using multiple, whether it is a large corporate transaction or a MSME transaction or a agri transaction. But I think for an Indian context, what is greatest advantage for the usage of AI is the inclusion it brings on the underwriting. The second big usage of the AI in our bank is with regard to the fraud risk management or there are multiple such early warning system where many of this prevention or the AI usage has been on a real-time basis, we can detect things. You might be knowing there is a RBIH, which is a RBI Innovation Hub, and they have a application called Mule Hunter. So we are one of the bank to implement Mule Hunter. Mule Hunter is doing something detecting the fraud on a real-time basis on the top of the entire transaction system. So that's something very, very significant in terms of the usage of AI there. Of late, last 1 year, 1.5 years, we started implementing the usage of AI in the customer relationship. I mean, when we use AI on customer relationship, there are challenges over there. And initially, when the usage of AI on the customer relationship, we have the chatbot, which is again AI powered. And around 8 months back, we came out with a robotic virtual relationship manager. It's a robotic humanoid which can interact with the customer on a real-time basis and can do 17 financial and non-financial transactions. This is a unique experiment in Indian market, wherein a usage of AI, this is powered by the Gen AI. Maybe you are traveling across Delhi, then you can find billboards also talking about this model called Aditi, which can interact with customers. So we are trying to have a different customer experience in terms of usage of AI. So we as a bank, as on today, we have 50 use cases in multiple verticals, starting from underwriting, fraud risk management. At the same time, we have 8, what you can say, enterprise level Gen AI powered use cases, which are again including the Aditi I'm talking about. And the third and most important in terms of driving AI is that we as a bank, how do I make it the AI usage more responsive? So later on I'll come out with all those themes. But as far as Bank of Baroda is concerned, AI usage has been significant. And it gives immense productivity or the efficiency as far as the bank is concerned.
Yeah, thank you, Dr. Chand, for those insights. And I am sure this is just the beginning and there is more to come. Now let me turn to the non-banking financial company counterpart, Dr. Debarag Banerjee. Uh, uh, NBFCs have traditionally been more nimble-footed, more, sort of agile in terms of embracing technology, and you have always been talking about the return on data investment, and that is something we find it very interesting. We have had glimpse of insights as to how L&T Finance is using AI into credit underwriting models, taking a video of the household and deriving models out of that, judging creditworthiness of the borrowers. So what are the typical alternate data sources that you are channelizing? The behavioral signals, transaction patterns, device metadata, geospatial indicators, and all this, how you are embedding into your credit underwriting models, and how they have been proving to be effective than the traditional approaches. And how would you see that going further in the days to come, and when agentic gets embedded into this decision-making process? And are there any challenges that you have encountered in the process? How have you mitigated them in your journey?
Yeah. So, so we have launched a flagship underwriting platform called Cyclops, which works by taking a 360-degree view of the customer through multiple different data sources, coming through many different APIs and scoring more than 15, 20, sometimes scores of machine learning models on something their scores and coming up with decisions most of the time within 3 seconds. Now, why? So first, it enables a better understanding of the context and not just a view of the individual when we try to make these decisions. Context can mean what kind of living circumstances they are in, what areas do they live in, can I understand that better from geospatial data around them, can I understand their life stages, can I understand their needs, why they are taking this loan, and ultimately lending is about the future. In future, is he going to be able to repay my loan or not? Now, when you look at India, about half of the Indian population is below 27 years of age. And if you look at the credit thickness of this population, if you used the traditional, yes, somebody took a loan and hence we can give them another loan model, you would not be able to justify most of the loans that this population can actually absorb, can actually utilize and actually grow with. For that, we need to look for alternative data that go beyond it. Now, as it so happens that because of the massive scale of mobile penetration, digitization, and, by the way, e-governance, we are able to get much better fingerprints, digital fingerprints on borrowers, be it from their expenditure behaviors that by and large are happening. A big part of that is happening through UPI and other kind of digital payment mechanisms. Whether we look at their expenditure and income patterns as evidence from their banking activities, which are again enabled by the account aggregator framework that the government has put together, and also way beyond, like how are they using their apps. I mean, today we roam around with these digital companions called smartphones, and they tell us a lot more about ourselves than traditional credit bureau reports used to, and so on and so forth. It keeps going. And even when you go into what we usually used to consider data poor areas like rural India, things like satellite data, things like GIS information, things that used to be unstructured, and today, with the help of LLMs and other mechanisms for taking that unstructured data and deriving signals out of it, we can make these models make decisions that bring all of this into context. And to the extent that when we launched Cyclops and improved it over 3 times within the span of 1.5 years, which is, by the way, a staggering rate of improvement, in deployment, we saw that our credit cost is coming down to almost 1/3 of what it used to be. And so that is what we look at and call our return on data investment. All of that data that we are acquiring, processing, modeling, and predicting on, that is a return that we get. And by the way, if you then translate it into what that does to the lives of the good customers who actually use their loan responsibly and return back, it adds to the overall improvement of the country.
Yeah, thank you, and good to learn that there are some early gains that you are able to see in terms of reduced credit cost. Let me turn to the technologists on the panel. Everyone is talking about agentic AI and things like that. And of course, as we say in the financial sector, when you are dealing with people's money, trust is very important. And it's a trust-based activity, and no matter how powerful the technology may be, it will never be adopted unless it enhances trust. So how in this framework, when agentic AI is getting slowly embedded into the financial spectrum, how do we continue, or what we need to do to continue, maintain and enhance trust in the financial system? What kind of toolkits, approaches that we need to build in where agentic AI gets seamlessly blended in the financial services and trust is also ensured along the way?
Sure. Okay, can people hear me on this? Okay, great. Before I get there, so I just wanted to point out something else. So right now, in parallel with this session, the National AI Policy for Health is being announced. And that too, we have adopted the same 7 sutras that we started with the RBI report. So I think we are really shaping the national AI policy landscape with that report. So that's a good thing. So getting back to trust, right? So it gets doubly problematic when we talk about agents. So even when you talk about basic AI systems, right? So in fact, if we start off with the trust is the foundation as one of the mantras for how we build. I know the echo is really bad. The trust is the foundation. No, not just on this. When you're talking, I'm getting it. I don't think it's better. Okay, great. So so trust is the foundation, right? So there are 2 questions here. The first one is, how would you trust the AI model itself? So a lot of work that is being done in terms of evaluating these models, benchmarking these models, and so on and so forth. And one of the deliverables that we have been proposing as an outcome of this summit, right? So I also chair the Safe and Trusted AI Working Group, and so we have this will be announced in a couple of days. So we are setting up something called the Trusted AI Commons, which is essentially going to kind of gather a lot of tools, benchmarks, and use cases, or basically toolkits, right? Processes as to how would you build AI models that are trustworthy for the global south scenario. Right? So it's not that if a model is fine in the US, it will always work the same way in India. So all of these things we know are a challenge, right? So the basic fundamental AI model itself has to be trusted, has to be tested for trustworthiness and so on and so forth. That's one part of it. The second question you asked was about agentic AI. Now that raises yet another concern, because now even if the AI is trusted, right? So how do I know that at that point the agent is acting legally on behalf of a human, right? So I think we need to start having more kind of a large, especially in the fintech space, we need to have more of a framework that is established in terms of some kind of a non-violable contract that a client is going to have to enter into to allow an agent to do banking on their behalf. So some kind of a commitment saying that, okay, the agent is going to do this service, I've accepted that this is what it's going to do, and whatever consequences I'm going to accept, and maybe it's some kind of a digitally, completely digitally signed process or something like that. But we need to start building extra mechanisms, additional mechanisms for establishing trust in an agentic world. I don't think just going and fixing the AI is going to help build the trust in the agentic world. I think this is something that we have to really think about.
Yeah, thank you, Dr. Ravindran. I think you brought us to the another important dimension for today's discussion is uh, how do we think about the liability framework for the customers, for the regulated entities, or for the model developers in this entire AI space? Who is liable for what, and how the customers need to be protected? What we have talked about in the report, because the customers need to be protected at all times, and it is generally the regulated entities that need to take the responsibility of how the service is rolled out. So in this context, let me turn to Tara, and given your global experience and that perspectives that you bring, uh, how do you see the liability framework emerging across jurisdictions, and what should be the, based on the learning so far, what would be a good liability framework to aim at from a financial services sector, and especially in the context of agentic AI getting sort of embedded into the financial services? How do we see this space, and what are the challenges that you foresee in terms of agentic AI getting, and how do we bring the governance framework back to address some of these concerns? Over to you.
Sure. Well, thank you. First of all, thank you so much to the Reserve Bank of India for hosting us for this important conversation today. I think not least of which because, as you mentioned at the top of your remarks, banks have a long history of risk management practice applied in AI deployment settings. I think to your question about liability and accountability, this sort of is the defining question of the agentic AI era in many ways. And it's not a new set of issues. We had to navigate this in other sort of componentry in the AI supply chain, including with cloud services previously and other dimensions. But certainly there are open questions yet to be resolved, I think, given the current capabilities emerging. I think the way that we have started thinking about this at JP Morgan Chase is through what we are calling the shared accountability framework, which really, I think, describes a situation in which you see end users like banks and other model deployers being held responsible for their actions in deployment, but in the context of a much longer AI supply chain, which incorporates a lot of upstream vendors and suppliers and entities that support the delivery of that product or service. I think that the same rules, frankly, that we have applied to other tech policy conversations are certainly still relevant here, including focusing on governing outcomes using risk-based frameworks, technology-neutral lenses through which to govern AI. And I think certainly, there's strong alignment in India's approach to AI regulation, which has really been focused on empowering sector regulators in figuring out the answers to many of these questions and addressing the current regulatory regime in such a way that we're assessing where gaps might lie in existing guidelines and working to address those in a systematic way. I think public-private partnership is a key aspect of defining the answer space here. And again, I think that's another strength that the financial sector has long exhibited. We have a posture of being regulated and a strong relationship with our bank sector regulators, such that we've seen this musical before, and we know how to kind of work our way around some of these answers. And then lastly, I would also say from a global perspective, we're seeing a lot of fragmentation right now emerge in the regulatory space. And for banks specifically, that can pose special challenges because we do have existing frameworks that apply. We are now seeing technology regulation imposed by jurisdictions like the EU, for example, with the imposition of the EU AI Act that sort of overlay sector requirements and To some extent, there are some questions to be clarified about the extent to which sector regulators' pre-existing guidelines are to be applied within those kind of emerging rule sets. So I think a lot more questions and answers right now, but certainly we're well on our way to defining them.
Yeah, thank you for those insights. And I know Dr. Ravindran have to leave in about 10 minutes time. So let me take advantage of his presence and sort of take his insights on few of the other dimensions that we need to explore. One is, of course, like there are these cybersecurity risks and other risks where the bad actors use these very AI tools to increase the attacks, sort of machine-generated attacks continuously hammering the systems and putting the financial entities into a lot of vulnerabilities. So that is one area. Then second, for a country like India, can we really look at systems or where we can expand the horizon of AI, in terms of bringing the people use the language as a means to transact, do banking, language, or, how do we use this technology to sort of help disabled people or people with physical challenges to do the financial services. Otherwise, they will feel the financial, they will feel financially excluded or they are not able to use it. So what incremental steps that as a country or a financial services regulator we should take to mitigate some of these incremental cybersecurity risks on account of AI, as well as what kind of opportunities it gives in solving some of the financial digital divide that it may cause otherwise. For example, use of assistive technologies, use of voice as a medium of banking, how AI can help us.
Sure. So actually there are two different questions. They are not two partial questions, two very different questions. So let me very quickly address the first one because I have a longer answer for the second. So yes, I mean, it's always been an arms race, right? So earlier we were talking about DDoS attacks, now they could launch attacks on IT systems. So then the technology, now that there is AI, people are going to start using AI, and we have to start using AI to figure out defenses for that, right? I mean, there is no like a magic bullet to do that. A lot of, especially in the financial sector, a lot of banks have already started, building their own defenses for AI-generated attacks and so on and so forth. So that is one part of it. The second part, in terms of inclusion, right? So there is so much that we can do in terms of making, services more accessible, right? For example, you talked about language, right? So we are at a point now where we can start running pretty good Indian language models, thanks to the recent releases that came from Sarvam, that can actually run on the edge, right? In fact, now we are working on building tutors for children that are entirely driven on feature phones. So they don't need to work on a smartphone, they don't need a TV, they don't even need a display. All they need to do is listen to things on the on the feature phone, and then do like an IVRS based interaction. So for example, we are able to teach them reading fluency, just by listening to it. So here I'm going to play a passage for you, listen to it, and then repeat it for me. And then I can score it on the thing. Or I can have a textbook. Read the third paragraph in your textbook, which is standard, the CBSE book or whatever. The child reads it and then you can evaluate it. So these kinds of just voice alone based services are becoming a reality now, and things can now start run more and more on the edge. So in terms of accessibility that way, right? In actual, difficulty using digital systems and so on and so forth, I think that's going to slowly go away. And some of these models that we have been building in India, right, are actually pretty capable in talking in Indian languages, right? So I think that's one thing that we're going to get. But there's also another point. I think I've also talked about this with you in the past also. So with our UPI infrastructure, There is so much very small level, micro level transactions that are being recorded, right? So we have data at a granularity and the scale that's usually not possible elsewhere. And we should start thinking about, new ways of utilizing this to increase the inclusion in terms of financial services. And earlier it wouldn't have been possible because the frequency with which the data is being gathered, the volume of data that's being gathered is so much. But now with large-scale AI techniques that are available, we should be able to process these data more efficiently and use these. I mean, this is something which is not a problem. Else people are going to look at because they don't have the data. So it's something that we have to do it here, and we have to start doing the research here to start building the inclusion. So both in terms of accessibility, but also in terms of using newer financial data that was not available earlier. So all of this can enable inclusion using AI.
Thank you. And before I think we'll let you go, I'll just do a quick follow-up. There are a lot of deepfakes and sound spoofs which are coming our way. And once we are embedding, let's say, in the video KYC process, how do we really, are the technology strong enough, good enough to detect deepfakes, or there are still challenges that we need to overcome? A quick follow-up and then.
Sure. There are technologies to handle the most obvious deepfakes, right? And but then the really cleverly engineered ones are still a challenge, right? And also, if you start talking about deepfakes in Indian languages, that is still a challenge. There are very few people who are actually building products that you can use for doing deepfake detection in Indian languages. And particularly if you start going to code mixed language, right, where you speak Hindi, English, or the Tamil and English together, or something like that. And now that becomes even more challenging, primarily because we don't have enough data to train these models on. So there are teams around India, particularly IIT Jodhpur and IIT Madras also, who are actually trying to solve this problem. And but it's still a long way to go. The best way to think about it right now is, well, you always have to assume that there is a non-zero chance that you're interacting with something that is deepfake whenever you go online and do any of these interactions.
Thank you, Dr. Ravindran. I think we need a big clap for him. So that allows me to shift my table so that I come closer to my panelists. And let me now turn to Dr. Chan. And all said and done, the AI is a probabilistic model. It's a non-deterministic model, and there are bound to be some mistakes along the way. So how do you see internally how the governance should look at embedding AI within the organization? And we also understand that traditional audit models would not probably suffice to embrace this new technology. So how do you see these challenges, and what are your thought process how to address them so that this new technology is adopted in a responsible manner within the organization? Quick thoughts.
No, that's a very important point. As the AI journey of the bank has been, the first and foremost to have a AI policy per se, which defines the contour of the usage of AI. Because AI is no doubt a very powerful tool, but there are, constraint or limitation that also we need to be mindful while rolling out AI. See, specific, in terms of the usage of AI, typically low ticket, low probability, high success thing, normally the AI can do end-to-end journey. Cases where the risk is less, these are low ticket transaction, we can do end-to-end with regard to the AI journey. But cases where the probability maybe there is a high risk element therein, I think while designing the AI policy, we need to be mindful that the human being, they are in the loop and they are in control. So unless and until the journey where the ticket size is large, the probability may not be that high in terms of rolling out end-to-end kind of a journey, then we have clearly we have put the human being at the control. AI can assist you, AI can support you, but the decision would be that of the human being. That's very clear as far as our usage is concerned. The bigger challenge when we rolled out AI usage for last many years is how do you do the auditing part, and that's very the fair point that the auditing on the AI can be on multiple level. It can be at the level of the data level. It can be at the level of the model level. It can be at the rollout level. It can be post-rollout, the outcome level. So the kind of auditing teams internally we have, possibly we need to upskill them significantly to do all this kind of auditing. And the auditing can be done by the internal team or can be external support. But that's critical because the usage of AI has to be duly audited so that the outcome is not something, as the earlier point of the trust, as banking and trust is the same. Similarly, the usage of AI in banking, the trust element should be maintained. That's something we think very, very clearly as a bank when we rolled out AI. We have been using the governance model with the real use in terms of the considering the limitation part. What's critical here is that it should be a decision support system, may not replace human being. It can only assist human being for an outcome. And the idea is to improve productivity, efficiency, and I think we are deriving that. Only one point I'll pick it up from the earlier point to Professor with regard to the language, how the AI is being used. We have recently deployed, that is covered in the media also, we have recently deployed a communication AI model, which is called Bob Sambath, Bank of Baroda Sambath, where any customer can speak in any language. And my employee may not be, conversant with the language, then the language of his choice, my employee can understand through this AI model. Similarly, my employee talking in any language, the customer can hear the language at which the customer would like to hear. This is like Aditi is one of, again, a unique experiment Bank of Baroda has done. It's yet to evolve fully, but it's there to on a developing stage. And the bigger point on the entire issue is that suppose there are misuse of technology, it is only the technology can defeat the misuse, not of. So that's what my thought on the question.
Yeah, thank you. And in the committee report also, we have articulated certain stance with regard to the need for a revised approach as well. So coming to Mr. Debarag Banerjee next, traditionally AI is also, been associated with some of the risks, traditional risks such as the bias, lack of explainability, or rather I would say understanding what it means to the customer, what it means to the institution. So while building models and using AI in the workplace, how do we really, take care of this kind of risks in terms of bias, hallucination, auditability, accountability, and sort of explainability? So what would be a practitioner's practical recommendation, to embed this or factor this?
Yeah, so bias first starts from choosing the variables that have bias, right? So we need to be careful, first of all, to be to pick only those variables that does not single out the particular portions of the population that that might get unfairly treated or has had a historical unfair treatment, which can lead to contamination of human bias into machine learning bias. Now, after having chosen variables right, then the question is, are we treating the rest of the variables in a way to produce features that make sense? Now, if it is possible to explain why certain features are the basis of a model, whether it is in the form of a natural gut feel human understanding, or whether it is in the form of importance values, Shapley values, and so on and so forth, that organically come out from the model representation itself, that brings out explainability in models. Then the next aspect is, at the end of the day, even a machine learning model is built by a human. So is there any either bugs, unintended, intended, um, living bias of that person's own life experiences that may be leaking into, um, or is it is it that just mathematical statistical errors are creeping into it? So for that, what we created is a completely separate model risk management structure that actually do not even mesh into my organization. It stays organically separate, keeping them completely independent in doing their own statistical evaluation and coming up with recommendations of anything that they see is slipping. For example, a model may have been created a few months ago, a few quarters ago, years ago, perhaps even, and natural, aging, the natural progression of time may make it invalid, and those need to be monitored from time to time. And if necessary, challenger models have to be created, A/B tested, and then the best models picked. And then finally, when it comes to the compliance to the ability for a decision having made, the gold standard is this, that if you are able to explain that this is the reason why I have decided this loan to be approved, disapproved, this rate of interest, or so on, so forth, then that means you are able to fundamentally satisfy the criteria for fairness and transparency. And the today the science of statistical explainability has progressed to a point where those things are possible at a minimum for structured data models. Now, what we are increasingly seeing is that the transformer-based models that inherently has multiple parameters, they also can be subjected to a similar methodology where you can have a governance model looking on top of an LLM model and then coming up with explainable drivers for the decision that has been made. So we are putting all of this together. Now, obviously, it is a journey, right? And one thing I would laud the government of India for is that the guidelines that are being developed from the free AI and subsequent guidelines actually encourage that innovation. And that is very important because we are in an early stage still in where AI will take us. And unless we do this and unless we incrementally experiment this on the field, we are not going to get to the maximum potential of what AI can do while keeping us within the bounds of risk, explainability, compliance, fairness, and transparency.
Yeah. Yeah, thank you. And I think in our report also, the committee report, there is one of the design principles that we have talked about is innovation over restraint. And the idea behind that is to nudge. There is some certain degree of apprehension among the financial institutions as to if I do this, if there is a mistake, what happens? So everything else remaining same, we would urge institutions to take the innovation route, experiment lot, build controls and compensatory checks within your product approval process, rollouts, and then roll out those products. Yeah, coming back to Terra, you have, as I said, you have been operating across various markets and the rich experience from various jurisdictions. If the AI regulation, the way AI is regulated is fragmented across jurisdictions, it creates a very different challenge for a global player, global institutions. And this fragmented approach, of course, is a very difficult to manage as well. So would you recommend or would you suggest that there should be a global baseline kind of a governance framework that emerges, which each country adopts, and then on top of that they add their layer of additional add-ons depending on the country specific regulation? And if that is the case, then which are the agencies or entities suited, let's say the Financial Stability Board or the BIS, or would they work closely with entities like the IMF, World Bank and various global players and come to a conclusion which would set out the baseline standards and provide some guidance for the entire financial services industry? That is one area. And if at all you think in those lines, what could be the elements of such baseline governance standards? Any thoughts? I know it's a difficult job to answer on the spot, but to have your thoughts.
Sure, it's a great question. And I want to return to the last question and say just one brief comment before addressing that one, which is to say that I completely agree with the premise that some of the risk management constraints imposed on banks are actually, I think, falsely characterized as antithetical to innovation, when in fact it is often the case, as is the case with transparency innovations in the field right now, that banks are sort of leading the field in defining what the cutting edge looks like. And I think explainability and transformer-based models is a great example for that, where the research field, I think, is really being defined in large part by institutions like banks that have a responsibility to present that sort of audit trail while also delivering value for their customers and innovating at the cutting edge. So I thought that was a great point and just wanted to emphasize it. With respect to your much bigger question about global governance, this is the key challenge of the field right now, really. I mean, I spoke a little bit to this harmonization challenge in my previous response, but just to kind of further detail some of what's happening globally now, I think we've actually entered an era in which there's a big push by countries in the direction of sovereign AI, building their own tech stacks. Regulators are increasingly interested in differentiating themselves on the basis of creating different types of rules for AI regulation. We see this, the prime example for this right now is happening in the US setting, where the US Congress has essentially given priority to the states to regulate. And we're seeing that happen across all 50 states in somewhat different ways right now, creating a patchwork of regulatory requirements that make it really hard for even national organizations, let alone global ones, to operate, as you mentioned. So I think it's a key challenge right now in the governance space. I do think it would be useful for there to be sort of a global framework baseline set of requirements defined in the way that perhaps you're suggesting. But I actually think that the prudential banking regulatory system and bank requirements more broadly are a really excellent example for where we've done this in the past. We have empowered local regulators on sort of a baseline of shared characteristics and requirements that allow for a global financial ecosystem to operate fairly healthfully. We have a regulatory ecosystem in which diverse regulators share notes with each other. We have interoperability requirements that allow for transactions to take place on a global basis, and for banks like us here at JP Morgan Chase to operate in over 100 countries globally fairly successfully. Now the question then becomes whether we can do the same for AI. And again, I think my answer to that question, and your really good one posed about what those baseline requirements should entail, go back to what I said before about how they need to be technology neutral requirements imposed on a principles-based manner. We really need to be thinking about having risk-based frameworks that allow for diverse use cases that are all addressed according to the risk of those individuated use cases, instead of regulating technology broadly as defined as such. So that would be the starting place to my answer to that very hard question.
Yeah, couldn't agree more. I think it has to be a point well taken. It has to be principle based and instead of technology specific, and traditionally in India, all our regulations have been sort of tech neutral approaches. And maybe AI is such a transformative technology, there may be certain nuances that need to be brought in for AI to give the regulated entities the additional degree of comfort that they might need to embrace this one. So we are closing in on time, but I would have my, there are two questions I would ask for a no, rapid fire, quick fire, say 1 minute answer each from all of you, the same question to all of you. And uh, one question is on what for supporting innovation, using AI in financial services, what kind of unlocking would be required? What needs to be done? For example, I would say that whether there is a need for AI sandbox, whether there is a need for making labeled, clean data made available for the financial sector at a subsector level for the entities to build.
The AI journey is at the beginning, I would say, because unless and until the use cases have a significant outcome over a period of time. So I think the regulatory sandbox or all these innovations should continue. And there are two distinct advantages India is having. One is the demographic dividend and the kind of data you have. So I think the use case, the implementation would be much easier in a context like India. The second aspect with regard to anything that the policymakers should do further, I think as on today, India is right on the curve or ahead of the curve on the AI journey. But then two things again going to define our journey forward. We need to invest more. As a player, as a participant, we need to invest more. At the same time, India as a country, we need to create tech talents, which are important for taking us to the AI journey. So I would suggest for more investment and more tech talent on the AI space.
Yeah, over to you, Tara.
I think to the first question, I would say, honestly, regulatory clarity, and that applies not just to the sector, but to other actors that touch the sector as well. And I think we spoke to this to some extent at the beginning of this conversation in the context of the emergence of agents, which are interactions, you know, if you think about the e-commerce ecosystem that span far beyond the four walls of bank institutions and are going to call into question issues like the liability regime issue that you wrote that are going to require answers and swiftly in order for banks to be effective, responsible operators within that broader ecosystem. To your question about policymaker guidance, I'll sound a little bit like a broken record here, but I think bank regulators standing up and really defending their territory as the fit-for-purpose sector regulators of especially as the governance space gets increasingly crowded with other types of regulatory institutions stepping in and threatening that regulatory harmonization that we talked about. So I think that would be really helpful.
Yeah, thank you. Last words.
Yeah. So all AI ultimately stands on data. So to enable innovation, first and foremost, we have to make sure that our data is there, it's diverse enough, it's accessible enough, it is clean enough, it is governed enough, right? And then the other element that is often missed is the people element, right? So we need, India has a fantastic, young population, bright and strong, and the educational structure for strengthening the STEM and other skills to make them good creators of systems is very, very needed. And the government has a coming to your second question, government actually has a big role to play in both. So better data, more granular data, opening of sandboxes, letting financial institutions try out their models on anonymized, governed, guarded data, and then being sure that they can be partners in bringing forward things, and of course, better education at STEM levels to bring up the next AI Nobel laureates from India.
Thank you, thank you. Thank you, everyone. I think that's just exactly coincided with the times up here. Let me just quickly summarize. Thank you, gentlemen and ladies, Terra, for great contributions to this panel. A big round of applause for them.